Hello and welcome back to the PJ Trades review series, where I go over our real-time trades that we take in our premium Discord, and I break them down and give it to you guys here on the YouTube channel. I have just had so much fun with this series and showing you guys why we take trades, why we don't execute trades. So you guys honestly could use this stuff for your own trading. So all I ask that you do here, guys, every single day on the channel is leave me a comment, drop me a like, and subscribe. And I will continue to bring you these amazing trade reviews and continue to provide just as much value as I possibly can. So let's get on into the trade review here today and break down what I was looking at. So I want to break down this trade on a higher time frame first, and then we're going to work our way from the higher time frame down into the lower time frames, because with today's trade, you're going to notice a couple things that maybe you missed it prior, but I'm going to show it to you on the 4 hour, and it might be like an aha moment, like, wow, how did I miss that? Why did I try to take longs today? So let me just go from the 4 hour and we'll kind of break down what happened here today. So I'm going to delete price action just to show you guys, because this is where really the key to the entire puzzle starts, right? So yesterday's price action, we make a 4 hour inverse fair value gap, a very large one too. We flip it to the downside. Right here, based on that flip, you already in the back of your head have to be looking at this and saying, we flipped a 4 hour gap. We're pulling back into the now 4 hour inverse. Okay. And then really quick, you should jump on the 1 hour time frame and then take a look at this right now. I know it's a little bit messy because we have a lot on the charts, but I don't want to delete too much of this stuff. You see how we're pulling back into that 4 hour FEG? But if you look to the left again here, there is a 1 hour FEG right here, which went inverse, which was a protected first presented 1 hour gap as well. So you've disrespected 1 hour gap here, 1 hour gap here, and a 1 hour gap here, right? That's 3 1 hour gaps, a 1 hour first presented, and a 4 hour FEG to the downside. Okay. That to me is a pretty bearish, right? So if we see this and we hop on the 1 hour chart, this is where the next clue forms. Just by hopping on and having this stuff drawn on your charts, you already should start to see a visual picture on where price wants to draw to, guys. We always need to focus on draws on liquidity. I don't give a crap about really anything else. Where is the draw? If you can get the draw correct on your session, you will make money trading. If you're having a problem with draws on liquidity, you need to continue to study where liquidity rests. And I'm trying to show you guys here, just by having on the chart, London low, midnight opening price, Asia low, New York PM low, old London low, okay? And even below that, sell side. I believe this is a New York PM low. London low, old London low. Okay. We have so much resting liquidity below us than we do above us. Yes, I get we're at all-time highs, and you're probably wondering, well, why wouldn't we not be looking for longs here? Just go back to the 4 hour time frame, right? Longs here are going to be painful. We're going to have to flip this gap now to the upside. But we start getting rejection here. We start getting rejection. Now let's drop down onto the 15 minute. Remember, 4 hour, 1 hour, 15. Okay, what are we seeing here? Well, let's take a look. Market, okay, on Tuesday, displaces lower, right? And we start to pull back into that 4 hour gap, right? We can understand that. We get that. We pull back into that 4 hour gap. And this is where you need to start reading price. Whenever we trade, I'm not setting limit orders, guys. It's a question I get asked all the time. We don't do limits. we are reactionary traders. We don't do limits, right? We are reacting to price in our zones, right? And we're market ordering. We're using market orders. I don't ever use a limit, okay? So watch. We're in the 4-hour gap now, right? We're in this zone and we're starting to see some weakness, right? Just looking at the 15-minute time frame, we could see that we have all this lower liquidity. We even have trend line liquidity, which is also known as LRLR. Okay, so we'll build this up here. So we know that there is a good amount of liquidity to the downside, right? That's framed, right? That is framed now. Your DOLs, your draws on liquidity are all lining up for downside continuation, guys. This is continuation for lower, okay? Don't forget it. Look at the displacement. Look at the pullback. Now I'm looking for lower, right? Let's jump on the 5-minute time frame. So what do we do here? Well, this is now 5:40 in the morning. We don't do anything. We're just watching price, letting price start to play out, let the morning session start to play out. And what we're immediately starting to see is that price is looking pretty weak. And then we get a huge displacement leg, okay? Confirming the breakout. Opening range breakout traders probably made a fortune today because they love when you get a clean opening range breakout like that. So we displace below London low, okay? And we displace below Asia low. Now, pause. Everyone pause, okay? And understand what we're looking at here. I'm going to delete both of these because this part is very important and it's the key to maybe many of your struggles. We took London. We took Asia. But we didn't take New York PM low yet, and we still have London low available. Okay? Now, pause again. If we displaced and already closed below New York PM low, this idea that I took today would have been no longer valid. Liquidity is already taken. It's the lifeblood of your trading, guys. If liquidity gets taken, there's not going to be a model anymore, right? New York PM low is not swept yet, okay? This is when I start getting interested in a trade. Now, if the market is going to pull back and give me an opportunity to then short to New York PM low, short to London low, and all the next available liquidity lower, we're going to get a trade model, right? So, during this move here, am I chasing price? No. A lot of you guys on this leg, you get FOMO. This is where a lot of you guys fail. This is where a lot of you guys, I'm going to be honestly and blunt, you suck at trading right here. Because you don't understand that the market still has lower liquidity, and all you need to do is grow some patience and wait for now a trade model to take into New York PM low, right? Patience. Now here's what we do. We see price displace, but not take New York PM low. Okay. Let's start to play price out and boom, right? Well, PJ, we just inversed a 5-minute gap to the upside, right? Why are we not looking for longs here? Guys, listen to me right now. You need to stop being stuck on the 1 minute, the 2 minute, the 3 minute, the 5 minute, the 30-second time frame. The 15-minute plus time frames are going to save you. Watch what happens here on the 15-minute time frame. And this is why it's so important to be flipping time frames, guys. Watch the 15-minute. Watch what happens. 15-minute, sell side imbalance, buy side inefficiency, first presented 15-minute fair value gap on the breakout leg. If the bulbs are not going off in your head right now, I don't know what you've been doing for the last several months since I started this YouTube channel. Seriously, I don't know what you're doing. 15-minute fair value gap gets filled, first presented. Okay, beautiful rejection. Hop on the 1 minute. Now, this is where things get painful. This is where things got painful for us, right? Here's the first idea I end up trying to take right here. I want to show you guys this. Okay. I want to show you this guy right here. Okay, right here. We take trade number one. Now, trade's 100% valid. We get an inverse fair value gap delivering at a 15-minute fair value gap right here. Here's the inverse, right? We mark it out. We take entry, run my stops right about there, okay? But I do not like the chop suey session. So we take a 9-point scrape here. I don't know. We took a 9-point scrape. I believe it was like right here. I didn't like how we were starting to push higher. So we take a 9-point scrape. And I'm like, whatever. I still like this trade setup though. I'm still liking this. So at this point, I'm out of the market. I'm protecting mental capital because I don't like the delivery yet. Like we should have taken these relative equal lows right off of the inversion. So 9-point scrape. I paid to see that. Let the market go again. Now, I'm interested again. We sweep relative equal lows now. Sweep relative equal lows. The draws on liquidity are still there, and I'm trusting in my draws on liquidity. I take a re-entry model here, okay? A re-entry model here because I flushed the lows now, okay? And I'm respecting the inverse from earlier. And we end up getting full delivery, and the market ends up melting the rest of the session, okay? So, this trade, as far as the higher time frames go, okay, did not. It was actually pretty easy to read, right? We had a breakout, we had a 15-minute fair value gap get filled, okay, and then we're looking for continuation models down into here. Now, full disclosure, I was out of this trade at TP1. I was out. I took my 35 points on the session and was out of the session. Now, a lot of members. They rode this thing all the way down to that magnet down here for like 160 something point trade. And that was a big time trade today in the premium. But listen, I took TP1, right? Because I was happy with the profits. I didn't want to sitting this anymore. I honestly didn't like the earlier delivery at all. It was so choppy and really just not for me. And I want to protect mental capital. And I'm getting into 12 o'clock lunchtime. Take TP1. I am so fine with the money, and I make $1,000 on the day there on my live account, on my personal funded account. So that was today's trade setup, guys. I hope you guys get some value out of the fact that if there's still open draws on liquidity, you need to be patient here, right? You need to be patient. I think one of the hidden gems in today's video is right here. New York PM low is still open. Okay. 15-minute fair value gap gets put in. We wait for a tap into that 15-minute fair value gap, right? We get a nice rejection, and then you're looking for that short model down into New York PM low and down into the London lows, which is exactly what we did today. It just took a little bit of patience, and that's what trading is all about, guys. Is patience and discipline and risk management and a linear, smooth equity curve. Right? The reason that I take trades and I scale out of trades and I pay myself when I'm in a trade is because it's going to cushion my account, and my equity curve is going to be like this, right? Instead of boo, 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 like all over the place. I want to have a smooth upward curve, and scaling profits, taking profits, and paying the trader over a very long time, or not even a very long time, but a long time, is going to make you very, very rich. So guys, I hope you guys are enjoying the trade reviews here on the channel. And again, as always, just drop me a like, comment, and subscribe to the channel, and I'll keep bringing you guys the free sauce, man. Have a beautiful day.